Well, Bitcoin just did something it hasn't done this entire cycle. It's up 23% in a week, the biggest single week move on the chart, running straight into 79,500 before pulling back, and it stopped dead right on a moving average that's been declining for months. Tonight, we're breaking down whether this is the real turn or the biggest bull trap of the year. Yields just broke to fresh highs the same day jobs data came in this week, and it shouldn't happen together. Smart money split right down the middle, and weekly charts still carrying a pattern that says this could all get erased. I'm Chris Hare, the world champion crypto cowboy. Stick around, we've got a lot to cover, so let's go ahead and get into it. And let's start with the headline number. Bitcoin just printed a 23.5% weekly candle, 62,876 to a high of 79,531. It's the biggest weekly move on the chart this entire cycle. But there's a real story underneath that green candle. Early Saturday morning, right around 4 a.m. UTC, the market flash crashed. 523 million liquidated in a single hour. 1.8 billion over 24 hours, and Bitcoin briefly dipped back under $77,000 before stabilizing. It's sitting around 77,700 tonight, and the 4-hour RSI just hit its highest level in over 7 years. Traders are generally split on what happens next, some calling a push for 81 to 83,000, others watching a slide back to 70 to 72,000. We're going to deep dive exactly where this lands in a few minutes. Iran still simmering. President Pezeshkian actually called for the war to end today, saying Iran's negotiating from a position of strength, but Iran's own hardline security chief turned around and threatened Gulf states just hours later, and the military saying Tehran will not submit. China weighed in publicly too, telling the U.S. sanctions aren't the answer. New sanctions details are still coming, and Iran's calling them a declaration of war on every nation, not just itself. On the Fed, this one's genuinely uncertain right now. Kevin Warsh is set to give his first Jackson Hole keynote as chair on Friday, August 28th. But as of tonight, it's not even confirmed he's going to deliver it. If he does speak, he's already said it'll focus on big picture questions, not near-term rate guidance. The Fed isn't telegraphing anything anymore. GDP and core PCE both land on Wednesday, August 26th, the same morning right before that Jackson Hole stretch begins. Clarity Act still quiet, still parked at the September 15th procedural vote. Odds sitting around 16 to 24%. No new movement since the Senate left for recess. In the big picture, Bitcoin just had its wildest week of the cycle, and it's happening right as 4 separate storylines all collide in the same 9-day window. We'll get into every piece of it. And let's talk about what happened Friday night, because this is the piece most people are going to miss. Bitcoin ran from 62,876 all the way up to 79,531 on Friday. Nearly a $17,000 move, and the biggest weekly candle we've seen this entire cycle. Then right around 4 a.m. UTC, in the middle of the night, it broke 523 million liquidated in a single hour. 448 million of that was long positions. Traders who bought the top of that run got run over almost instantly in their sleep. Price briefly dipped back under $77,000 before stabilizing. And here's the part that actually matters. This wasn't a leveraged pump that got popped. Open interest barely moved through Friday's entire run, up less than 0.1% on that day. That means this rally happened without a big leverage buildup underneath it. Friday night's flash crash wasn't the market unwinding a bubble. It was late longs getting caught chasing a move that had already run too far too fast. And now we've got real technical warning sitting on top of it. The 4-hour RSI hit its highest level in over 7 years during that Friday spike. That kind of reading doesn't mean the move's over. It means demand got exhausted short term, and historically, readings this extreme have preceded a pause or a pullback before the bigger trend continues. Not a guarantee, but it's a caution flag. So here's tonight's real question. Was Friday night's flash crash the market clearing out weak hands before the next leg up, or the first crack in a move that already went too far? We're going to get into exactly what the chart says in a few minutes. And if you're finding value in these breakdowns, hit that subscribe button and ring the bell. We do this every single night, breaking down exactly what's moving your money and why. And you just heard it, 448 million in long positions wiped out in one single hour in the middle of the night while most people were asleep. That's what leverage does. It doesn't ask if you're watching. This is exactly why I moved a chunk of my own retirement into a Bitcoin IRA with iTrust Capital. There's no leverage, no liquidation risk, no 4 a.m. wake-up call because an exchange closed your position for you. You own the actual asset sitting in your own account, and it's not going anywhere while you sleep. Compare that to an ETF where you're trusting someone to hold the actual Bitcoin on your behalf. With iTrust, this is your account, your asset, held in a closed-loop custody system built specifically for retirement money. And here's the part that gets me every time. Every trade inside that account, the IRS gets zero. Not less, they get zero. And you got to think about it this way. You got an old 401k sitting from a job you left years ago. That money could be working for you instead of collecting dust. And if you've got grandkids, think about what you're actually leaving behind for them versus what you leave behind for the IRS. Right now, I trust running a $100 bonus when you open and fund the account. The link's in the description, and I'll say what I always say. Talk to your tax advisor and reach out to my guy, R.Rankin. His info's linked below too. He'll walk you through it straight, no pressure. Now, before we get into Bitcoin's chart, we've got to hit the macro board and stick with me here, because tonight this section actually explains something that shouldn't be happening. And here's the thing. Bitcoin's chart doesn't move in a vacuum. Oil, bonds, yields, the dollar, and where money's flowing between Bitcoin and the rest of the crypto market, these are the currents underneath the surface. This is the detective layer. The charts tell you where price went. This tells you who's actually pushing it there. Bitcoin dominance just broke back up above after 2 months of declines, closing at 59.60% on its equilibrium line right after tagging 59.79% intraday. But it's doing that overbought stochastic RSI pin near 87. That's a real relief bounce, not a confirmed new trend yet. If dominance stalls here, that opens the door for alts to start outperforming again. In the dollar, the DXY is oversold and sitting on support, closing at 98.86, pinned between 98.54 and 99.36. Normally that argues for continued dollar weakness, a tailwind for Bitcoin, but it's been oversold for weeks without bouncing, which means when it does resolve, it could move sharp in either direction. And here's the one thing that breaks the clean story tonight. The 10-year yield just broke to a fresh cycle high, closing at 4.73%. That's up 0.5% on the day. That happened on the same day we got a weak jobs report and a soft inflation print. Normally that combination pushes yields down, not up, and that's a headwind for Bitcoin, and it tells you the bond market isn't buying a dovish Fed pivot yet. That's likely tied directly to Warsh's deliberately quiet guidance heading into Friday's Jackson Hole speak, if he even gives it. West Texas Intermediate oil looks stretched and due for a pullback. Stochastic RSI's pinned near 95, a fresh bearish signal just printed, and it's got rejected today, right at resistance near 87.32. Not a direct Bitcoin driver, but it adds to the picture of a market that's runs hot across the board. And if you put it together, soft jobs and inflation data say one thing, but yields breaking to fresh highs say another. That's a real genuine split heading into Jackson Hole, and it's worth sitting with rather than forcing into a clean story either way. And listen, if any of that macro talk sounded like a foreign language, you're not alone, and that's exactly why I built a free beginner's guide. It walks you through everything, what dominance actually means, why yields move markets, how to read a chart without a financial degree, all of it broken down in plain English, the same way I'd explain it to a buddy at the shop. It's completely free, no strings attached, no email spam, links in the description, go grab it, and if it helps, share it with somebody who's getting started too. Now let's get into what smart money's actually doing, because tonight's generally split down the middle. Open interest sits at $8.17 billion, basically flat, up less than 0.1% on the day. That confirms what we said earlier. This entire 23% week happened without a big leverage buildup underneath it. That's actually a healthier setup than a leverage pump. Now here's the disconnect. Spot Bitcoin ETFs pulled $307.5 million in net inflows at Thursday's close. That's real institutional buying, no question, and the liquidation data backs it up on the derivatives side too. $3.75 million in short liquidations against $380,000 in longs. Shorts got squeezed hard, but if you flip over to the exchanges and the signal flips with it, net flow onto the exchanges was positive. $5.51 million more came in than went out. Coins moving towards exchanges is typically a bearish leaning signal, the opposite of what you'd expect if this were a broad institutional accumulation story. And here's the tell. If this were real heavy U.S. institutional buying, you'd expect Coinbase Premium to run positive. Instead, it's sitting negative, 2.74. Completely neutral, no usual U.S. bids showing up there at all. Even the short-term tapes telling two stories. The full day's volume delta was strongly negative. Sellers were in control most of Saturday, but zoom into the last 4 hours and it flips hard positive. Buyers stepped back in aggressively, sold all day, bought back hard into the close. Sentiment's warmed up, but it isn't extreme. Fear and greed sits at 67. It's a solid greed, not euphoria, and positioning's balanced too. 51.88% long to 48% short. No crowded side sitting out. They're just waiting to get squeezed. So here's the real picture. Institutions are buying the ETF wrapper. Shorts are getting squeezed on the derivative side, but coins are still flowing onto exchanges. And that premium shows no unusual buying pressure. Smart money isn't aligned right now. It's split, same as everything else we've talked about tonight. And before we get into the charts, I want to point you towards something that a lot of you have been using already. I put together a live dashboard where you can follow every level we talk about tonight in real time, not just when the next video drops, The weekly, the daily, the 4-hour, all the levels updated as markets actually move. So if Bitcoin tags one of these numbers at 3 a.m., you don't have to wait until tomorrow night to find out what it means. It's the same board I'm working off of right now. It's linked right at the top of the description. First link on the list. Go check it out. And let's go ahead and get into the chart that's got everybody talking, because this week, Bitcoin did something it hasn't done this entire cycle. Price opened the week at 62,876, and it ran all the way up to 79,531 and closed at 77,672. That's up 23.53%. That's the biggest weekly candle on this chart in the entire cycle, nearly a $17,000 range from low to high in 7 days. And look at exactly where it stopped, right on the weekly 50 smooth moving average, sitting at 78,051. Price ran hard, hit that level, and stalled dead. That's not a coincidence. That's a real decision point playing out live. Now, here's the important context. This candle is attacking a moving average that's been sloping down into price, not rising up to meet it. That's a harder reclaim than it looks like on the surface. This isn't price catching up to a rising trend. It's price punching up into a falling one. The momentum backs up the strength of the move. Weekly stochastic RSI just crossed bullish sitting mid-range with real room left to run before this thing gets stretched on the highest time frame. RSI is climbing too off a fresh bullish tag, and the money flow indicators crossing up from below the zero line right now with fresh green signal dots on the turn. That's a fresh bullish cross on the highest time frame we track, and it lines up with everything else this chart's telling you. But we can't talk about this chart without talking about the pattern still sitting in it. There's a head and shoulder structure here, the head all the way up at 126, 188, neckline broken months ago, and the measured target on that pattern sits way down at $34,000. Still unfilled. This week's candle is the most violent move against that pattern, the entire decline, but a 23% week doesn't erase it by itself. If buyers clear this moving average cluster and hold above 78,470, the next real target is 79,531, this week's zone high, then 80,381, then 81,309. If sellers reject this level and price falls back under 77,690, that undoes the whole week's structural win, and this starts looking like a liquidity grab into overhead supply instead of a genuine turn. Closed candle decides whether this is the start of something real or the biggest fake out of this cycle. Moving on to the daily chart, this is where the story gets more complicated because the daily is telling you something the weekly isn't. Today's candle opened at $77,000, ran all the way up to $78,000, dipped to $75,601 during that overnight flash crash, and closed at $76,685. It's up just 0.78% on the day. Small body, but that range tells the real story of what happened Friday night into Saturday morning. And here's the problem on this time frame. Price is sitting roughly 10,000 above its own daily moving averages. That's a long way to run above your own mean, and it's exactly why this chart's showing real signs of exhaustion. RSI is sitting deep in overbought territory. Stochastic RSI is rolling over from the very top of the range, with the fast line now crossing below the slow line, a bearish cross forming right at the ceiling, and money flow indicators elevated and stretched up near the top of its range too. Everything on this time frame is telling the same story. This move ran hot, fast, and it's due a breather. This doesn't mean sell it here. It means the daily is the time frame most likely to demand a pause before this goes any further, even if the bigger picture stays intact. If buyers step in and this consolidates rather than breaks down, the next levels up are 80,381, then 82,584, and that's an important one because clearing 82,584 is the first level that would meaningfully damage the head and shoulders pattern we've talked about. If the sellers take control from this overbought read, first stop down is $75,000, then $73,000, and if that goes too, we're testing 71,750 next. Closed candle decides whether the daily's overbought signal was just a healthy pause inside a bigger move or the start of giving this whole week back. Now, if you want to actually trade what we've just talked through, Blowfin's where I run my own account. They've got their best beat the heat event running right now. Trade $300,000 in futures volume and you get $39 back. Work your way up to a million volume tier and you're pulling $139. And if you're really moving size, 10 million in volume gets you a $6.99 payout. New users also get 10% cash back on up to $500 futures bonus, plus a 30 days of VIP 1 status just for signing up. This one's capped by time, not by user count. Runs through August 28th, so the clock's still the thing working against you here. You'll find the link in my description. Now zooming into the short term now, because this is where tonight's story actually looks more constructive than the daily led on. Price opened at 77,300, ran up to 78,000, dipped to 77,150, and closed at 77,698. Up 0.5%. That's shallow, controlled range considering what happened overnight. This candle sits right where the breakout shelf was built, holding above it, not falling back into it. And here's the real story on this time frame. The momentum already reset. Stochastic RSI ran all the way up to nearly the top of the range on Friday's spike to 79,500, and it's already flushed back down to the oversold and crossed bullish again. That's a full oscillator reset, only about $1,800 pullback from the high. Shallow price correction, complete momentum reset. That's usually a continuation signature, not a breakdown signature. RSI is cooling off from a spike near 90, but still elevated. And the money flow indicators got red signal dots sitting right at Friday's high. That's the one caution flag on this time frame. A real sell signal that fired right at the top, and it's still working its way back down. So here's the tension on the 4 hour specifically. Price barely gave anything back, and the oscillator's already reset like it did. That's either a market that's about to reload for another leg up, or one that's pausing before it rolls over for real. And if buyers hold above this shelf, first target up is 79,530, Friday's high, then 81,309. And if sellers take control, first stop is 75,771, then 73,043. And below that, 69,790 to 69,935. That's the real bull bear line where daily and 4 hour moving averages stack together. All right, let's pull all of it up together, because tonight there's a lot stacked at once. The bull road, Bitcoin clears and holds that weekly moving average cluster, 77,690 to 78,470, then 79,531, Friday's high, then 80,381, then 81,309. Clearing 82,584 is the level that starts doing real damage to that head and shoulders pattern. And if this keeps running, the golden zone up near 89,402 to 89,438 is where that bearish pattern would start looking genuinely invalidated. For this road, I want to see the dollar's multi-week oversold condition finally resolved to the downside. Bitcoin dominance stall out here at resistance instead of breaking through, in a calm or dovish outcome of Jackson Hole if Warsh even speaks on Friday. In the bear road, you can't rule it out. Bitcoin falls back under 77,690, and that undoes the whole week's structural win. First stop down, 75,771. Then 73,000, then the real line in the sand is 69,790 to 69,935, where the daily and 4 hour moving averages stack together. Lose that, and the head and shoulders target at $34,000 is genuinely back in play. For this road, I want to see the 10-year yield keep climbing past today's fresh high. Bitcoin dominance break clean through its own resistance, and a hawkish surprise out of Jackson Hole. Write this down. The weekly chart says this is real. The daily says it's stretched. And the 4 hour already reset like it's ready to go again. That's the 3 time frames, 3 different messages in the next 9 days. GDP, PCE, Jackson Hole, then clarity, and the Fed back to back in September are what actually settles it. Markets don't usually hand you that much collision in this short of a window. And one more time before we close out, if tonight's breakdown on yields, oscillators, or any of it left you with more questions than answers, go grab that free beginner's guide. Links in the description. Free education, no strings attached. And we'll close it out with our spiritual closer, just like we do every single video. Tonight comes from Proverbs chapter 3, verse 5. Trust in the Lord with all your heart and lean not on your own understanding. Tonight we watched the market run further and faster than it has all year, then get shaken hard in the middle of the night while most people were asleep. A chart that's telling 3 different stories on 3 different time frames, and a week ahead that's about to decide which one wins. I could sit here and tell you I've got it all figured out, which way it breaks, but guys, I don't. But I've learned the moves that I can't control are the ones I need to carry. Some things are just better than a candle close. Going to wrap it up right here. Chris Hare, the world champion crypto cowboy. I really appreciate you watching. We'll see you down the road.